What's going on, everyone? If you guys are interested in learning how to day trade, then this is the video for you. If you guys watch the entire video, you're going to be learning about my entire trading method using no indicators besides this 21-day EMA, and we're solely going to be relying on the bars printing on the chart known as price action. The method that I'm going to be teaching today works for futures, which is what we're looking at, S&P 500 futures, but also for stocks, crypto, Forex, whatever it may be. And the way I'm going to be going over the chart is just by going bar by bar and letting you guys know what I am thinking about as the bars are printing on the chart live and how to spot the different setups. So let's just get into the video. The day started off with a lot of choppy behavior and what is known as a trading range. So as we see, we have prices going from the highs down to the lows. We have a short-term downtrend, but we have a break of this trend, and then we have two more tests at these lows, signaling that this downtrend is over. The rules with trend lines and trend channels are that once there's a break and a new extreme, so in this case there's a break and a new low, that signals that the downtrend is over, or we should at least start thinking that it might be over and looking for prices to reverse, which we see right here. And the next thing we do is just draw our trend in the other direction. Now we see that prices have a break of this trend and we keep pushing higher and then higher and higher. So in this case, the trend actually might be something a little bit wider. And now we have a break, and we're still looking to test this new high, which we eventually have. And the trade setups that I mainly focus on are the two-legged pullbacks. So in this case, we have one pullback here and another pullback here before pushing forward. And we actually have a first very good trade of the day right here. So let me explain this trade. When we're looking at uptrends, we want to see two pullbacks in the other direction before going long. So as we see, we have one pullback here and another pullback here, which we see by the black arrows. Now, when we're looking to go long, we want prices to be above the EMA, which we do not have here, so we have to wait for another setup to occur, which we actually have right here. So in this case, all the people who thought that this uptrend was over are looking for two pullbacks in the opposite direction. So they were probably looking at something like this and thinking, okay, prices are going to reverse because this downtrend is over. So they would be looking for second entry shorts or two pullbacks in this direction before going short. So here we have one pullback and another pullback before testing the EMA and bouncing off with a very nice bullish bar. So all the people who went long after this bar trapped all the people who were going short, looking at the two-legged pullback in the short direction when they should have really been thinking that prices would resume upwards. So we have a new low here, a first entry short, second entry short, failure. This was a very nice trap trade. A slightly advanced trade, but nonetheless, it's a very good illustration of what we look for in these markets and in these trends. So now we see that the trend resumed in a very strong way. So we once again either can draw our uptrend as something wider, like so, or we can simply focus on the shorter term trends, which I like to do, and look for measured moves, which we see here. We have one leg up and another leg up right around here, signaling prices can start to resume because this also works. These type of pullbacks also work on the larger time frames. So as we see, we have one pullback and another one in a larger time frame, which is why we started to reverse. Now the downtrend or the uptrend does not necessarily have to be over, but it just gives us a sort of indication that prices can start to chop around before the trend resumes. Now, with this method, we only like to look for the highest probability trades, and by doing so, we can always make ourselves on the right side of the market, and we can draw our range once again, because as the bars are printing, we always want to just draw our illustrations to tell us an idea about what is really going on in the market. So once again, we are looking to find high probability setups that comes in the forms of pullbacks when the prices are trending, but also when in a range like this, we can look for higher lows or lower highs. Let me explain what that is as well. So the first main thing to realize is that at the highs of the ranges, we want to look to sell, and at the lows of the ranges, we want to look to buy. This is because other people in the market are thinking the same things, and that's basically the reason why these trend lines and trend channels and basic theories work in the first place. So as we see, we have a new high here, and we're expecting prices to go from the lows to the highs of the range. So we have one pullback here, another pullback here, followed by a very nice bullish bar once again. Also, what I was explaining just a few moments ago is that we look for higher lows in these ranges. So we're coming from this low, we have a leg up and a double bottom here and a higher low with a nice bullish bar that closes above the EMA, and that trade would have been excellent once again. That was also combined with the fact that we had two pullbacks, so it just made our trade even that much more high probability. Now, once again, we can just be patient and wait for prices to reach these highs, and we look to sell once again, but only in the forms of trades that we just looked at, which is failed second entry longs, because here we had a second entry long because we were looking for prices to go up. So once we're at the top of the range and we want to look to sell, we can either look for second entry shorts or failed second entry longs. So let's see if we can spot one. Here we have a lower high because we went from these highs, we pushed below the EMA, we had a lower high, but in this case, we can see that these prices are really, really congested, so we want to stay away from this trade, even though it would have worked out. That many bars stacked, you always want to stay away from, just because there's a lot of choppiness and you're not 100% sure what is going to happen. So once again, we just have a lot of stacked bars, and we're waiting for prices either to reach these lows or trade up back to the highs. Now I'm thinking, because we went from the highs and we only made it to the middle of this range before testing the high once again, it signals that there's more buying pressure than selling pressure, because all the people who are trying to sell couldn't reach the low of this range, signaling, okay, we shouldn't necessarily be looking to sell just yet, because there's more buying pressure and prices keep making higher highs. We have a new high here, a higher high here, and another higher high right there. So at this point, we can look for long entries and pullbacks once again, which we see we have right there. We have a new high, a first pullback, and a break, and then another pullback before we have a nice bullish bar at the EMA. In real time, I was looking at this trade, and it was a very good one once again. It follows all of our trend line rules as well, because we have this trend working up, we have a break, we're still looking to test the high before the trend is over, we have a very nice bullish bar, and all of our rules were followed, so we can look for that. And once again, we have another higher low here, confirming this second entry long. At the EMA, nice bullish bar. That's another great trade that would have worked out. Now we see prices just continuing to be choppy before going higher and higher and higher. So we can actually stop thinking that there's a range and start thinking maybe there's a another trend channel in place like this, because prices fit this very neatly. And we can look for our two-legged pullback pattern once again. And we actually get one that looks like it right here. So we have one pullback, another pullback before we have another bullish bar, and prices go up once again. As we see, there's just many setups that we can look for, and this trading strategy works, like I said, in any market. And the thing about it is you really only need to take a couple trades a day, especially in the futures market, and you can be making a lot of money. Now, we see that we have this uptrend, we have a break of it, and a new high signaling we can start looking for prices to potentially reverse and look for failed second entry longs, because all the people who are going long after the uptrend is over might get trapped. So we have one pullback here, another pullback, but in reality we want to look for pullbacks in the opposite direction because we're looking to trap the people. So if we're looking for longs, we would be counting from the highs and be looking at pullbacks in that direction. So we're going down, we have a first entry long, and we went down once again, and we have a second entry long right here. Now, because we had a break and a new high, and we're below the EMA, we don't want to look for longs anymore. But what we want to look for is failed second entry longs, which we have right here. If you would have sold after this bar, you would have trapped all the people who went long because they're looking for the two-legged pullback after the downtrend is over while we're below the EMA, and we have a nice bearish signal bar, and that trade would have worked out for a scalp and even more. So now we're looking to see what's happening with this downtrend, and we see that we have a short-term one, we have a break and a new low, and we have just some choppiness before the trend resumes in the other direction. Now, because we have a break and a new low, we have to think maybe this downtrend is over and we can look for trades in the other direction. So now, if you're still looking to look short, you're going to look for two-legged pullbacks looking like this. And if you're still looking to go short, you're going to be counting from this low. You have one pullback, first entry short, another pullback, second entry short right there. But you really should not be going short because the downtrend is over. We had a break and a new low, signaling it's over. We have prices above the EMA, and also this signal bar is way too bullish to be going short. But what happened? We ended up breaking below that bar, and then we had a failed second entry short opportunity. So all the smart traders are going to go long right there because we have a very bullish bar. It's above the EMA, and that trade rocketed off as we should think it should. And I think that's just going to wrap up the video. Prices are actually still trending higher. The market is still open, but I just wanted to make this quick video to show you guys what I look for in the markets. And I hope you guys enjoyed the video. Let me know what you guys think. Peace out.